So tonight we are on the third of our series, which is Fire Starter number 3. And yeah, so we have we have Seth and Olivia, which I will be introducing to you guys in a short while. So tonight our topic is resilient investing, on how to kickstart our portfolio in uncertain time. You have Seth and Olivia, so maybe let me introduce a bit about Seth. So just now when we talk about like, Seth, what do you do? And then Seth has been doing YouTuber, right? Yep. But actually, he's the true blue blogger. He started from blogging.
Started from there.
Yeah, started from blogging, then become a YouTuber. But of course, his day job is a client advisor.
Correct.
And yeah, so he has experience not just his own portfolio, but also for his client as well. And for Olivia, if you have seen her somewhere on different TV screen or YouTube channel or news channel, you obviously know that she's in this entity with a logo like a bull, orange color. Yeah. So, but tonight, Olivia is just speaking for herself, representing herself. So she's here to share her knowledge, her experience in terms of investing. Okay. So without further ado, maybe we have some time for our speaker to share some interesting fact about themselves. Seth, what's interesting that you want to share with us?
Oh, well, since I'm public speaking now, I might as well just say I have actually have very bad stage fright.
Okay.
Yeah, so I'm here to try to conquer that
everyone
fear.
give a clap.
Yeah.
Okay.
That's all. I'm not a very interesting person.
The fact that you share that is quite interesting, really. All right, Olivia, how about you?
I love GTA and video gaming, and I've been gaming since I was 8, and it's really unexpected when people talk to me.
Okay.
But also, I used to have a skateboarding bulldog.
So thanks for your introduction. Let us focus on today's topic, which is resilient investing. So what is resilient investing to you guys? And then in your circle, for the past like 2-3 years, with all the ups and downs, what is the general consensus in your circle of friends and community? And are they still investing? Okay, Seth, go first.
I think resilient investing means that you invest regardless of market conditions, right? Because you have certain aims that you want to achieve, and therefore, be it market up or market down, you stay vested so that you can achieve your financial goals. Yeah, and I think in my community, it really depends, I think because now interest rates are so high, a lot of risk-averse people, they just go for fixed deposits, they go for T-bills, those sort of things. And then there are still, of course, people, now market has rebounded a little bit, right? So there are people who are still chasing the market highs now.
Okay.
Yeah, so I think it really depends on risk appetite. People who are risk-seeking, they will invest regardless of market conditions. And people who are risk-averse, even if you tell them it's a very good time to invest and all, they probably will not.
Okay,
yeah.
So there's depends on personality, whether they still invest, but risk-averse people still, in terms of investing, are they investing now or they just...
I would say that if they're risk-averse, be it market down or market up, they don't dare to enter.
Oh, okay.
Yeah. Market up, they don't dare to enter. Market down, they use it as confirmation that, hey, it's good that it's good that I'm not invested in the first place.
Okay.
Yeah.
All right.
Yeah.
Thanks. So how about yourself, Olivia?
Well, before I answer that, thank you so much to Goodwhale and everyone for having us today. Such an important topic, Eric. You highlighted resilience, right? I think with my communities, that's the top thing on your mind. How can they build a resilient portfolio? And just from personal experience, I think it's how I define it is really how strong your shock absorbers are in your life. You've got so many tools out there, so much access, so much you can use, and you can keep learning for yourself. But what are you choosing for yourself to defend your base? And I think this is the prioritization that even I myself find myself struggling with sometimes, because there's so much noise out there with the uncertain markets and rising rates environment that Seth just mentioned. So really, I think redefining resilience is now taking uncertainty as the norm. How can you then strengthen your battleground for what's going to happen next? And yes, people are definitely still investing, but it's just a matter of where to look at and what direction to go forward towards. Because I think sometimes when we get afraid, right, when we're in panic mode, I think that's when the worst things happen.
Yeah.
And that's when we start to lose our minds in terms of even investing. So I think keeping a cool mind and listening to the right people out there is a skill that we need right now.
All right. Okay.
For the month of August 2023, Weibo is giving an excellent deal where you can get up to $580 worth of free Tesla shares. Just open an account with the link below, fund $300, and that's it. You will get one of these following prizes. You can get free Tesla shares worth 58 USD or even 580 US dollars. Otherwise, you may also walk away with 80 to 280 US dollars worth of trading vouchers. It's a super fast free promo, so sign up with my link below, and thanks for signing up, and thanks to Weibo for sponsoring this video.
As an investor, how can really one build a portfolio that can withstand all this uncertainty? So how do you build a portfolio that withstand like the ups and downs, the W shape, the V shape, whatever shape of the market is?
I think the obvious answer is diversification, right? So, and it's not just across asset classes, but even within the asset class, you know, when you buy stocks, don't just buy individual companies. And even if you buy like ETF, right, don't buy ETFs that are too narrowly focused. Yeah, so personally, I believe in having a globally diversified portfolio so that I capture market returns, right? But, you know, nothing too exciting, but yeah, in the long run, I should still get at least the market returns, rather than having to worry about which sector is going to do well, you know, which country is going to do well. I think it's a less stressful way to invest, and therefore it's also more resilient in times of like,
All right.
Yeah, in
So it's more of
turbulent
like the
times,
choice of the investment options that you choose, which is less volatile.
Correct.
And less stressful in a sense.
Correct.
So that the emotional resilience help your portfolio to become more resilient in.
Yeah, so I used to buy like individual companies, and then when there are good news, of course, you are very happy about it.
Yeah.
But when there's bad news, your portfolio takes a big hit, right? But now that I buy the market, it's like, it doesn't really matter to me what happens to individual companies, because I know that in the long run, market has shown that it will trend upwards. So yeah, I don't actually worry too much about
So
daily movements.
You less stressful, that's why you have better withstanding power in any market. All right.
Correct.
Okay. How about you, Olivia?
I think that's a good point, because what you were also mentioning was the fundamentals. And I think people do oversee that sometimes when they're going and jumping on different bandwagons.
Yes.
You hear something on Twitter and then you hear something
Ooh.
on TikTok, right?
Yeah.
And you're just like, okay, let me look into that. Let's go. Let's go.
Do you still go to
But-
Twitter now?
Yes, even with the change of logo. I love it. I still love it. But
It's
there
no
is just
longer
so
a blue
much,
bird.
especially for the US market. I think there are just so many thought leaders in there that really move people within the spaces. So it's still quite a big resource tool for me. But really, the fundamentals that I'm talking about is when I really invest in a company, I have to love that company. And what I mean is I have to love their future. I have to love their balance sheets, their leader, their fundamentals. And I think that is the obsessive research that we kind of have to put ourselves through if we want to look into the long term. So to me, I think everything has ability to be stressful, right? In anything you invest in. But for me, I'm more of a long-term investor approach. I don't really take so much risk.
Okay.
Which sometimes is a bad thing. But personally, I tend to really lay low with that.
Okay.
Yeah,
Okay.
I like to make a good choice, and I like to know that I'm right, which
Okay.
is also a bad thing. Because I've had to learn how to accept when I'm wrong.
Well,
And
this is a very great point.
Exactly, and even my mentor was telling me that the faster you accept you're wrong, the better in the markets.
So it's like face the mistake and then.
Oh, you
deal
just
with
gotta
it.
face it.
Yeah. Okay.
And
Yeah.
then go back to your own philosophy.
Okay, wow. So I think you raised a very, very great point right here, which is invest company that you love, and then you grow with it together instead of like hearsay, which is you don't understand them, which is it becomes stressful when the share price go down or even go up. Because we don't know what happened to the company. So I think you stress a very point, which is the fundamentals of the company must be strong, and then you must love it and know about it. Okay.
Absolutely. And there are days where you don't love the company because, you know, things change all the time in a matter of weeks, in a matter of days. And so I think the essential components is if you do enough to make an educated guess, then you'll know what your next move is. Yeah.
Exactly.
And community as well.
Yeah.
Yeah.
Thank you for highlighting this to our community. All right. So maybe just now there's one pointer that Steph also talked about, which is diversification. So we know we have to diversify, but what exactly the role like the diversification play in creating a resilient portfolio, like, and then how do you balance between like maybe your defensive one and your aggressive one in terms of diversification?
I don't mean like diversifying. An example would be like across different sectors, right? So if we look at the tech sector has done very well over the past decade or so, but like last couple of years, you know, there was a lot of volatility. So if your whole portfolio is in tech, then last couple of years, yeah, it might not be that enjoyable for you, right? But for someone who has diversified across different sectors, and you buy the market, you buy a globally diversified ETF, you don't have to experience that kind of as sharp a drawdown as someone who's very exposed to a single sector would experience in any downturn. Yeah, so that's what I mean by diversification. When you have, let's say, 10,000 stocks, it's always going to be less stressful than if you have just 5 or even like 1 or 2. Yeah, some people are all in on a particular car company, which I feel is of course when it does well, it's of course very good, but of course when it comes back down and it comes back down hard, that's where I think people get stressed lah. And
I'm actually a bit more on the opposite end.
Right.
I find 10,000 companies, being invested in them quite stressful for myself. But that's why I think over the years, I've learned to really prioritize and really go into just a few that I would love to hold for a long time. So it really doesn't matter if it goes up and down, but the trends and the industries are really important. So just to share on a personal level, quantum computing is a sector that I'm looking at, and I have invested in that. I'm looking, of course, in the sustainability space because that's aligned with my personal values, and also just really futuristic trends. So that's something that is what I do as well, right, on a daily basis. So I'm accumulating knowledge, but at the same time, I also try to use that and apply it to my own life.
Wow.
So everything's
you have
holistic.
a different view right here.
But I think if you at least have a strategy
Yes.
and then you execute that strategy and you stick to that strategy, I think it's better than
Being lost.
being lost and then you just act and react as the news come in. I think that's probably not the best way to invest lah.
All right.
So if you're sure of your strategy and it works for you, actually that's fine, I think.
Okay, so in other words, resilient portfolio doesn't mean that you have to like have 10,000 or maybe concentrate portfolio. It's just that the strategies that you pick that fits to the characters or fit to your risk profile that makes your portfolio become resilient instead. So it's like more of like emotional control that precedes to your skills of building it.
Yes.
That's one, but I think diversification, I mean, even if you are into sector picking, there's still some value to be had, right? I think, would you buy just one stock or would you buy multiple stocks? Let's say in those sectors that you mentioned.
I've become quite open-minded in terms of like really going a range of stocks within a particular sector. But before, I've only stuck to only 1 or 2.
Right.
Yeah, I think over time, also because as I get older, I accumulate more resources. I have more willingness to lose, right? I'm more willingness to go,
more money to lose.
Exactly. So I put more in, I'm like, okay, I'm okay with losing that. And that's fine, right? And I think that's the important part about redefining your philosophy and your strategy, where you are in life, your accumulated experience, how many mistakes you've made. But essentially, it's about, like what Seth mentioned, it's something that works for you, but also I think also like back to the core values of why you invest and what is your long-term goal, like why are you even investing?
Wow, this is a thing whereby a lot of investors who have lost, they are very right. I think you brought a very good point. It's like sometimes I also talk to my community. So like when when I ask, like, they ask certain stock ABC, it may be a car company or maybe a tech company, they'll ask, then can I buy or can I sell? And the first questions that I'll ask, so why you buy in the first place?
Yeah.
For those who have bought, like, why do you buy in the first place? But a lot of time,
I don't know.
yeah, they don't know.
I think that's the addiction and the fun part of investing. I think investing has to be fun. It's got to be something you enjoy, right? At the end of the day, I'm not going to do it if I don't enjoy it and don't enjoy the returns as well. But I think with those sort of communities, they tend to be lost in the intention, but also because it gets addictive, this winning and losing phase. That it's beyond trading, it's more into the gambling phase, right?
Yeah.
Where you get that adrenaline rush.
You get, ooh, that feeling, wow, I make it right. Yeah.
Yeah,
I make
so
that
what's
money.
next?
Yeah.
I think I find myself on the opposite end again because I
Yeah.
feel like investing, there's a quote, right? It should be as exciting as watching paint dry.
Oh,
Yeah,
yeah.
if you want excitement, go
Ooh.
to Vegas. take $800 and go to Vegas. Yeah,
Yeah.
so I feel that investing, especially, it depends on your profile, right? Because if you're someone who just started out, you know, in your 20s, mid 30s or so, and you have 2 or 3 decades before your retirement, I think you can afford to make it boring, right? Make it automatic and just focus on other things in life, like your day job, your other pursuits, and then just let compounding and the markets do their thing. I mean,
Right.
that's just me, but I do recognize some people do feel that investing is something very fun and recreational, which I also have a, how do I put it, for fun portfolio where I make speculative bets. But by and large, I think most of my money that I cannot afford to lose, because I don't have that much money to lose, right? I will set it aside in, diversified, very diversified portfolio.
I find this two angle is quite interesting.
Yeah.
So Olivia said, wow, investing must be fun. That's why I came to also draw the so-called relevance on what you have said earlier, which is you invest in companies that you love, the leaders and stuff like that, that makes the fun part of investing, whereby when you invest, you know what you're investing in. But for Seth, it's like, wow, I don't want to have so much headache, I want to have less trouble. That's why I make investing boring, like watching paint dry, which is, I don't know,
The less exciting, the better.
Yeah.
cannot. I cannot watch the paint dry. I will go on crazy watching just a blank wall there.
That's why the whole point is you don't look at it, right? Yeah,
Oh,
actually,
yes.
you buy and then
I'm
you forget.
similar.
Yeah,
Yes.
people who buy and keep monitoring it, actually, they're the ones that do the
Yeah.
worst because they try to actively interfere and they end up
Control as well.
buying high, selling
Right?
low. Yeah,
Yeah.
yeah. So yeah,
Well, I think that's the goal. It's like there's investors, like after they buy, right?
yeah.
It's like every single second they just watch the share price go up and go down.
I mean,
I
there's-
was like that when I first started. I was up till late at night just looking at it and trying to see what happened with it,
yeah.
right?
I think
But
most
that's-
investors, when we start out, we try
Exactly.
to.
And I think a
Okay.
lot of people do relate to that. And I
Yeah.
think a good point you mentioned there, Seth, is the idea of retirement age. And I think now the younger ones, and even in the ones in my communities that are in their early 20s, sometimes even 18,
18,
already
all right.
investing.
Wow.
Yeah. And they want to retire ASAP. Fire movement. Like they want to just be free
18?
of any obligations and get it as soon as possible.
As
So
young
that's-
as 18.
Yes,
18 years old, they talk about retirement.
exactly.
Okay.
And I find it amazing because they are using all the resources out there that wasn't available when I was 18 as well.
Well, exactly,
And
yeah.
they're learning as much as they can, just
Yeah.
so that they can implement it in the next 5 years.
Yeah, and then they know stuff so much more than I do when I was 18 also.
Yeah,
Yeah.
exactly.
Maybe for the ground, just have a feel lah. So in terms of investing, do you like it fun or do you like it boring? Anyone like it fun? Fun. All right. Okay. Two of you. Anyone like it boring? Whoa. Okay. So you have a huge fans here. All right.
1-0.
Yes. We'll keep the scoreboard.
Okay. So I think that there isn't a right or wrong thing about fun or boring. It's just basically a personal character and strategy that
Yes.
the investor pick. But maybe just come to this point whereby, regardless, is it like taking a fun approach or a boring approach, the market still go ups and down for sure. everyone faced it, right? Everyone, like every day, suddenly Fed do something and then go down, and then Fed don't do something, go up, and then some people tweet in the bluebird, suddenly go up. So there's so much ups and down in the market. So, like, are you concerned about it? And then any indicator that you watch out in this kind of markets ups and down that you take so-called actions or decisions on it? Like any indicators? Like, are you concerned?
Well, I mean, there's so much we can talk about in terms of indicators, but it really depends, what are you using to invest as well. If you're using a particular app or if you're using just a traditional format, right, of investing, which has a time lapse in today's context. So I think for me, I use a lot of tech tools. I use a lot of the apps. I really diversify across the apps as well and try to really look at different sectors, but also try to be open to redefining my portfolio. So now I'm even looking at emerging markets. I would love to get some opinions on like countries like Vietnam as well. I'm really looking into that and resources, books, tools, papers, anything, just throw it out there. And also the REIT sector. So I think it's really trying to, because a lot of my investments were global, but because of market uncertainty, now I'm also being open to investing more on home ground in Singapore market, which has the characteristic of being more stable, more conservative, which I think is also a good thing. Yeah.
All right. How about yourself then, Seth?
For me, I'm still not watching the paint dry. So I let the paint dry. So I don't really look at indicators. But when markets are down, I'm actually more excited when markets are up. Right? Because again, the runway from now to retirement, I still have tens of years to go, 10, 20 plus years, right? So I would be excited at the opportunity to buy more. So when actually markets are green, I actually don't like it that much. Because I don't need the funds right now, you see.
Wow, people don't like, Seth don't like market is green. I think there will be people down the street. I mean, why you don't like? Why I want it grow.
Sorry for those who are retiring now, right? Yeah, but I think for accumulators, we actually do not need our portfolio to be green all the time. Because if it's green all the time, it means that you are buying at higher prices. Yeah, so I actually, if there's any indicator I look for is when markets are red and there's like news of 20-30% drawback, that's where you can just plot back, excess funds that you have to buy more.
All right.
Yeah.
Okay. There's a very interesting perspective. This is the first time I heard people say, I don't like the market go green. So I think it's a thing whereby there's a difference right here again, in a sense that Seth don't look at the paint dry, which is he focused more on other stuff. Other than investing, and for Olivia, I think it's because of choice and concentration on asset type, right? Because if you invest a lot in stocks, then you'll like
and I also
more
think
time
the
and
more
emphasis.
macro approach, also because of who I am. I'm trained as a journalist, so it's really digging deep into global trends, human behavior, looking at where the the narrative of economics is going, and then trying to figure out from there what's in the future 5-10 years. So it's looking at experts out there as my indicators, news. Sometimes I look at technical indicators, but of course I look at the interpretation of that technical indicator. I don't necessarily do it myself.
Okay. So it's not so much like looking at the chart and then draw the up and down with candlestick and stuff like that, but more of like the meaning behind all the technical indicator. All right.
Yes.
Okay.
And interpretation.
Wow, nice. Just now we talked a lot about like your portfolio, like being in like stocks or being in like ETF and stuff like that. So maybe can share with us a bit more your strategy on managing the risk during this uncertain market. Like go deeper. Like so, how exactly you so-called manage, or your strategies that you pick that fit into this kind of like uncertain market. Yeah.
I think it's already decided at the point of investment. So you should have a goal of what you want these funds to be for, right? So if you are investing for retirement, right, then your timeline is 20-30 years. You should have already factored in the fact that markets will go down sometimes, right? And you just continue to invest in it because your goal is 20 years later. Yeah, you only want it to be green when when you're approaching a retirement. Yeah, so when times like this, right, it's really all noise lah. To me, it's like you're not there yet, right? You are not at your destination yet. The plane is still mid-flight. There's turbulence, right? So there's no point in what are we going to do? Try to get out of the plane at that time? No, you're supposed to sit there until you reach your destination. So
But
I think
people will read
yeah.
it's not turbulence, it's just plane will get crashed.
Okay, okay. So the analogy is not perfect, right? But
Yeah.
even if the thing is the case, that leads people to do things like sell at market bottoms, right? Right, and that's not the way you invest, right? Again, it's buy low, sell high.
Yeah.
Yeah, but because if you don't have a consistent strategy, you will then end up selling at very low points.
Yeah. So it's
Yeah.
like buy low already, but people will sell even lower.
Correct. So my point is that you just invest in a diversified manner. You year market this for, let's say, 10 years, 20 years, and then you just let it do its thing. Yeah, I think active investing, I mean, some people find it fun, right? And that's fine, right? But I think it's a very stressful way for a lot of people to invest, and therefore you can take a more hands-off approach, I would
Okay.
say.
Would you like to expand more on what do you mean by hands-off approach? Like hands-off, what does it mean?
So you just so you invest for a particular goal, right? And then you perhaps put down a lump sum, and then you every month maybe you invest automatically.
Okay.
It needs to be automatic because the moment you need manual interference, right, to do it, busy right, very scared of the market, all this, you end up not doing it, right? And I speak for personal experience. Like, even though I am supposedly more well-versed, right, there are times whereby I just second-guess myself whether or not to invest this month. So it needs to be automatic, it needs to be, and you leave it hands-off. Yeah.
So a bit like robo-investing whereby you invest monthly kind of thing.
Correct. In fact, there are studies that show that the best investors are dead people who invest and then they die. Really, you can Google this. You can go and Google it. And and the people who are dead, they do the best because they do nothing to their portfolio. Yeah. So I mean, I'm not.
I don't want to die so soon yet, but
but you
if
can
that's
Google
the
these facts. So
Okay.
sometimes
That's interesting.
the ironic thing is the more you try to improve your returns, the lousier they become. Because I would say that the market, you are competing against forces like big institutions, big people with a lot more resources, right? So of course you can study the heck out of the company's fundamentals and everything, but all this information are available to us and we can see it, right? But there are people with far more insider news and power, and there's a power asymmetry and information asymmetry in the market. So I don't think I can beat those players to find inefficiencies in the market to get alpha, so to speak. Yeah, so I just invest in a hands-off manner. I just capture market return, and that's good enough. Because if you look at market returns, 10+% per annum, if you can put for 10, 20 years, that's good enough returns. And I don't have to do extra work for it. Yeah. So that's my philosophy.
Taking like robo-investing, automatic
robo-investing, or even if you use a particular orange trading app, right? Or blue one, whatever your preferred animal is, right? Okay, some of them they have RSP feature. So set it up once, be very clear what this is for, and then you just let it do its thing.
What is RSP?
A regular savings plan.
Oh, regular savings plan. means
Not the insurance kind, the regular investing kind. Yeah. They call it RSP.
Okay. So Olivia, how does can you share your secret move in the market?
I mean, if you're talking on the passive income space, is that what you're referring to? In terms of portfolios?
The strategies that you adopt in investing that
Okay.
help you to so-called go through this W shape in the market.
Yeah, so I'm very similar as well with Seth in terms of diversifying, but really across all kinds of components, you have the trading functions, right, that you use daily. That's something that I do play with. And a lot of my passive income is actually 45 to 50% within the stock space, ETFs, everything. I've just put it there. 20% in cash, definitely, just for the savings. And actually the rest are from my family business and real estate. So this is something not in Singapore. For me personally, I actually got a head start outside of Singapore. I think now it's a bit harder for younger people in their 20s to get started if they're not married or anything. So the Singapore context,
the life issue here in Singapore, man.
and it is a real problem in Singapore. So I think getting a head start elsewhere actually helped me really think ahead, so that by the time I'm 35 and I'm not married yet and I want to invest in Singapore and buy property, then I can go for it.
Okay.
Yeah, but all these components, you have to be able to move it around in terms of percentages, because if you are so rigid in your strategy, I think that's the losing way.
So giving
forward.
some flexibility in terms of portfolio,
Yes.
give you a better sense or feel less stressful in investing in this market. But I think just now you bring out a big point whereby when you invest, you look at your total portfolio as a whole. Is it of like single company? So you're like 50% in your business, like another like in your
Yeah,
stock.
more macro
So it's
approach.
like you have a more holistic view on your portfolio that help you better manage in this kind of uncertain period. Okay, yeah, I think I do agree, because like when investors or even like our community, they come by, they just talk about a single stock or maybe one or two stocks.
Yeah.
And then when I ask, hey, do you feel any like really bad in terms of your total? They say, oh no, just portion of my money.
Yeah.
they whatever they shared in the past 1 hour is like, why you say like so stressful kind of thing. Yeah, okay. So I
Exactly.
think that's a very great point right there. So I think before we open the ground for Q&A, maybe just one last question. How can you stay calm and avoid panic selling during this period? How can you stay calm? Because when markets volatility kick in, everyone go haywire. Every community shout or buy or sell There's a lot. So how do you stay calm?
Yeah. I think more relevant for Olivia, because I think I've answered most of it just now. So you want to go first?
How to stay calm? I think the most important thing is, if you know what you have there and you've made educated choices and you know what you can do next or your exit plans, then you'll have that confidence to handle any sort of downfall. And like I said before, anything you put in, before you even go in, you must be willing to lose. I know there's a
Alright.
Chinese saying on this as well, because my mom actually taught me this.
Willing to lose. I don't know what is the Chinese
Yeah.
anything, but I don't
There is
I
a
don't like
Chinese
to
saying
see
to
it in my
this.
portfolio. Okay.
Yeah. So really calculated decisions, informed decisions, and really knowing why you invest is really important, because even if you lose something the next day, you'll know what your plan is next, and also, potentially what could be an alternate solution to it. So another thing is, for myself, in terms of investing, I always do it so that I can do two things. Is to free up my time,
Okay.
and number two is to accumulate knowledge for myself.
Right.
So as long as I'm doing those two things and I can have time to really relax, like Seth said, just leave it alone and not touch it, because I made that informed choice, then it's getting me to where I want to be in life.
Nice. So what I get right is like informed choice, definitely informed decision, but also the key thing I pick up right is the exit plan. Like
Yes.
know when to like really you want to exit or not exit. You know what is your plan.
Yeah.
I think that's a great pointer. So
Yeah.
Seth,
So I think
really
we have
still
some-
watch the paint dry.
We have some similarities in the sense that if you have a strategy, right, you have already made an educated choice on what to invest in. Yeah, then you just let it do its thing, right? Because it's not time for you to liquidate. Then so there's some volatility to be expected. Yeah, but I think the point about losing money, I think that's where maybe I differ a little bit because I don't believe in losing my, because my money is for my retirement, is for my goals that I want to reach. So that also explains why I'm more conservative, I think, compared to Olivia. Yeah, but I guess if you are in more speculative assets, then maybe earmark some funds that you're prepared to lose entirely. Yeah, but
Okay.
otherwise, if you have funds that you really cannot lose, then you probably want to take a more conservative approach with that.
So you actually reminded me of an analogy. So currently I'm at the end of 33 Strategies of War by Robert Greene. Go read it if you haven't read it. But he actually went through a chapter on staying calm, right? Because he's talking about the soldiers. He's talking about the greatest warriors of our century within that book and how they succeeded. And in war, you need to always stay calm and be a master of your emotions, right? And he actually talked about Alfred Hitchcock and his films and how he was on set. and it was chaos, right? On a movie set, it's absolute
there's
chaos.
so many people
so
doing
many
different
things
things, yeah.
happening, so many things can go wrong. But he was always calm. Sometimes he was even sleeping on the set when the actors were just, acting
Okay.
and really messing up, right? But why? Why?
Because he's the big star, he don't need to take care of anything.
I wish, but he actually went into the psychology of Alfred Hitchcock, and one thing he mentioned was months before he prepped like crazy. So he actually went through the storm in his head internally to really prepare for that big day. And I think that's something we can learn from. If we do our homework, if we are confident in our approach by actually putting the time and the effort in, then when the big day comes, whenever it comes, we're able to handle it, just like him, or maybe even be asleep.
So, like before investing, you already imagine whatever market go up, go down, it just happen in your mind, and then when it really happen, it just, nothing at all.
Yes.
All right, okay.
And that takes mastery and skill and time, accumulated experience.
I think having that so-called mental prep is important. So whenever things still happen, we can still hold on whenever so-called things happen. We can still go on with our own life, I would say, instead of like going down the down spiral and then let your portfolio bleed, but you don't know what to do. Yeah.
Yes. And that's
Okay.
the point of resilience, right? Downward spiral, but if you bounce back,
You
then
bounce
at
back
least-
a better portfolio.
yeah, hopefully.
Assuming the portfolio bounces back.
All right, so maybe we open the ground for question itself.
Thanks for watching. Let me know in the comments below if the Q&A is something you want to watch. Subscribe to my Telegram and check out this video YouTube things you really want to watch, and I'll see you in that video.